What's up everyone, and welcome to Jayconomics. My name is Jay and it's a pleasure to meet all of you. On this channel, we take a look at anything related to finance with a strong focus on investing. So if that sounds like something you want to be a part of, then please consider subscribing and liking this video to help me on my quest to befriend the big, bad YouTube algorithm. Let's talk about CloudMD, baby. In this video, we'll analyze and discuss Q2 earnings that were released last night, as well as touch on today's price action. At the time I'm recording this, CloudMD stock has been halted, and their scheduled presentation at the LD Micro 500 Virtual Investor Conference has been canceled today. The company's stock was halted at the request of the company, pending news. And now, after hours, we have that news. Let's read through this article. So here it says, CloudMD is excited to announce that it has entered into an agreement with Canaccord Genuity Corp and Beacon Securities Limited on behalf of a syndicate of underwriters. The underwriters have agreed to purchase on a bought deal basis pursuant to the filing of a short form prospectus an aggregate of 9.4 million common shares at a price of $1.38 Canadian per share for aggregate gross proceeds to the company of approximately $13 million. The firms also have the option to purchase up to an additional 1.4 million shares at that same price of $1.38 per share, exercisable at any time for a period of 30 days after and including the closing date, which would result in additional proceeds of $1.95 million. So this is a deal with no extra fees and no warrants. The fact that the deal is only shares and no warrants is a big thing here. Unless you are the one who owns them, warrants in this situation, in this deal, would not have been a good thing for retail investors. Essentially, what this equates to is these firms loving the long-term outlook on CloudMD so much that they went knocking on their door and basically said, "Hey, we love what we're seeing here. Can you sell us your shares in bulk, please?" For context, docstock closed last Friday at $1.36 Canadian. So just 2 days later, they got this deal done at a higher price than last Friday's close. I think CloudMD did really well here. Now, with this cash, CloudMD can now turn to more acquisitions. You know what they say, cash is king, especially with what CloudMD is doing with their aggressive acquisition strategies. I'm positive that they're doing this for a specific reason and will use this cash in a way that will bring value to their shareholders. In terms of stock price in the short term, there may very well be a pullback, but think about it like this. CloudMD just added 13 to 15 million right into their pockets. For traders, this is bad news, but for long-term CloudMD holders like myself, this is great news in my opinion. Think about it. If you got in this month at a much lower price, perhaps stressing over a few pennies, well, we now have financing at $1.38. That's huge. Sure, in the short term it's not ideal, and I see it halting the incredible momentum the stock has had over the last month. But that being said, if we do see that likely pullback, this will give longs a chance to add to their positions and for the stock to take a healthy breather. Let's take a look at the chart to show you what I mean. Docstock has been on an absolute tear. If we look at the monthly over here, we see that it was trading at 77 cents Canadian per share on August 4th. So the stock has more than doubled in a month. A pullback here is good. It's healthy. Besides, if you're a believer in telehealth and in what this company is doing, then this should be a golden opportunity for you to add to your position. It shouldn't be something that scares you, so please, don't worry. Alright, let's get into why you probably clicked onto this video in the first place, which is to go over the Q2 earnings. So Q2 2020 total revenue was $2.78 million compared to $1 million in Q2 2019, representing an increase of 163%. The revenue generated from the SaaS model digital services was $459,000 compared to $340,000 in Q2 2019, an increase of 35%, which is primarily from organic growth. The revenue generated from medical clinics and pharmacies was $2.3 million compared to $721,000 in Q2 2019, an increase of 223%, which was primarily due to the company's aggressive focus on acquisitions throughout this past year. Gross margins stayed relatively stable throughout this period of aggressive growth, which is always nice to see. It did slide from 50% in Q2 2019 to 42% this past quarter. This can be mostly attributed to CloudMD's expansion into Ontario and of course the effects of the illness. CloudMD does expect the gross margin to improve as the company becomes more efficient, and also due to additional revenue from high-margin segments of their business like digital services, pharmacy kiosk partnerships, and telehealth visits. Net loss and comprehensive loss in Q2 2020 was $2.7 million, resulting in a net loss per share of 3 cents. Adjusted EBITDA loss was $1.9 million for Q2, compared with adjusted EBITDA loss of $602,000 in Q2 2019. However, I don't see this as a red flag at all, because when you take out the elevated levels of marketing, consulting, and legal expenses related to launching services in the province of Ontario and increased acquisition activities and the contingent liabilities recorded in Q2, well then I think this is quite normal. And if we look at the balance sheet, they actually have cash and cash equivalents of $13.8 million, and now you can actually add to that another $13 to $15 million from the offering. So they're in very good standing right now. Now I get plenty of people asking me whether I like WellHealth or CloudMD better. The answer is, you can't go wrong. Well is actually up a massive 28% today after a big announcement of their expansion into the US market. I've owned Well since April. I bought in at $2.55 Canadian, and I've added to my position since then, right before they started their run. My point is that as a long-term investor, stop worrying about what the company's stock has already done. Focus on what it will do. The mindset of, oh, it already doubled, so I can't invest now, it's too late. Well, imagine if people would have said that about Apple. Now, I'm not implying that these telehealth companies are the next Apple. I'm just saying if you believe in the company long term, get in. Time in the market beats timing the market. They are both fantastic companies and will be industry leaders, especially in Canada. I don't know which one will come out on top, but it's like picking between Apple and Microsoft. You'll be very happy you invested in either, or both, like I chose to do. CloudMD has a bright future, and I think this is easily a 10x plus stock over the next 5 to 10 years. I own 1,850 shares of this tiny Canadian company at 85 cents Canadian, and another 225 shares in another account. And I'm strongly considering buying more, especially if we see a dip tomorrow. I also own 7,000 warrants at 30 cents Canadian, and after today's action, I'm up 98% on that position already in a matter of just a few weeks. These warrants have an exercise price of $1 and expire in 2022. So what that means is that up until 2022, I have the option but not the obligation to exercise these 7,000 warrants and trade them in for shares. Now, if I did that, I would have to pay that extra dollar. So in total, I would be paying $1.30 for these shares. This comes in really handy, especially if my thesis on this company plays out like I think it will. If you're not too sure how warrants actually work and you're interested in learning, you should check out my in-depth warrants video right here. Okay, final thoughts. I think CloudMD is a game-changing company that will be a fantastic investment for years to come. If what they do resonates with you, get in. Dollar cost average if you want, but don't stay on the sideline. You'll regret it even more later. And in terms of the offering, I really do think that this is a very positive thing for CloudMD looking forward. Alright guys, if this video brought you some value, please make the like button turn blue, as it really does help the channel a lot. And don't be shy to leave a comment below. Are you invested into CloudMD? How many shares do you own? How do you think the offering will affect the stock in the short term? Do you think we'll see a dip? Also, if you want more content like this, I got plenty more coming your way, so subscribe and turn on that notification bell to be notified when any video comes out. Okay, that wraps it up for today. Thank you all for watching until the end, and let's grow this community together. Until next time, take care and invest smart.